We're halfway through the year, summer is in full swing, but home prices are starting to feel like the early Christmas present that buyers have been waiting for. It is time for the June market update. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. If you have seen this video, you know that prices usually peak here in Denver around June. Well, not this year. They peaked last month, which was May, but actually that data, all of our data here is 30 days behind, right? We're presenting it to you from last month, which means prices really peaked here in April. All those under contracts for May were happening in April. So our market happened short, fast, tight. It was a very condensed spring market here in Denver. Now that we're starting to see a turn of the tides, let's dive right into the June data. We saw 4,000 homes go under contract in May. It was 200 fewer than the month before. We're down about 5% month over month. However, year over year, we're still up 3.5%. Closings are up 500 month over month to 4,100 closings in May. That put us up 13% month over month and actually exactly on par to where we were this time last year. The sellers came out of the woodwork. We had 500 more new listings, up to 6,300 new listings in May. That put us up 10% over the month before and up 27% from this time last year. The months of inventory continues to trend up slightly as well. We are now over 2 months of inventory. 2.2 is where we're at currently. Interestingly, the average days on market dropped. It went down to 26 from 30, while the median days on market went up by 1 from 8 to 9. All right, on to those June home prices. The average sold price for all homes, $709,000. That is a decrease of $12,000 from the month before. That brings us down 1.5% month over month, but still leaves us up 8% year over year. The single family home price average is $791,000 this month. That is a whopping $20,000 decrease month over month. That brings us down 2.5% month over month, but we are still up year over year 7%. The condo and townhome average price is $460,000. We are off the mark $8,000 from the month before, so down almost 2%. Year over year, the condos and townhomes are still up 2%, however. Over to those median home prices. The median sold price of all homes is $595,000. This is down $6,000 from the month before, so off the mark by about 1%. Compared to this time last year, though, we are still up 4.5%. The median single-family home price is $650,000, down $10,000 from last month, which means we are down 1.5% there. But compared to last year, we are still up 4% year over year. And last, the median price for a condo and townhome is $407,000. This is down $8,000 from the month before, so we are down about 2% month over month. The median price, though, is still up about 2.5% year over year. All right, so what does all of this mean for you buyers and sellers? Well, first of all, the market was really fast, really tight, as I mentioned in the early part of the year. We have already hit our peak, and traditionally, as this video shared, once we hit our peak, we're on a downward trajectory until the end of the year. It really has only happened since COVID and the one time where we hit our peak in October because of the market shutting down early in the year, where we have a rebound later in the year. So something very unique would have to happen this year for us to hit a peak, come back down, hit another peak, and then have probably another decline toward the holidays, which is a pretty normal time for us to come low again. So it doesn't mean it's impossible, but it would be highly improbable for us to see the market rebound later in the year this year. I just heard another agent doing their June market update and say, oh, we're heading into summer. It's such a strong time to buy. There's a lot of activity from buyers. Sellers, you should feel really good about entering the market. I wanted to kind of throttle that agent. That is, to me, self-serving or naive, because really in Denver, the summer is never the best time. It's not the worst. It is not a time to put on the brakes, but July 4 is really the time when our market strongly tips. July 4 is usually a really quiet weekend. Everybody heads off to the mountains, the wildflowers are blooming, and mud season is over. It's usually dry, great time to hike, and that is a strong tipping point in our market. and it's kind of the midsummer time frame, and we've already seen the tipping point happen. So for someone to come out and say to the public, follow me, trust me, and it's a really good time to jump in, sellers specifically, I was a little twisted up inside about that. Now, we're going to talk more about what the rest of the year looks like and why sellers, it might be your stronger time if you're going to sell this year. However, if you don't need to, I would probably say hold off a little bit. Now, buyers, these are your months. Once we've hit the peak of the market and we're on our downward trend, it is your time to capitalize on things. It's your time to come in and start looking at deal opportunities. It's your time to see the market on its backside, right? So you are really starting to see your power position come into play. This isn't a blanket statement. There are certainly times where you are going to have to fight for the house you want, but you're really starting to see a place for you to come in and get more house for your money. Buyers, last month when I pulled this stat, 50% of homes that hit the market were selling in the first 7 days. This month when I pulled the stat, only 40% of homes that hit the market were selling in the first 7 days. So we are starting to see a shift in how quickly things are moving. Something else we're finding interesting is that we are seeing more inventory hit the market, but when we compare ourselves from today to a pre-COVID average, we have 25 to 30% less buyer demand than we did then. Yes, we know rates, right? But we are seeing more sellers entering the market right now. So typically we see that we are bound up because of rates. That's where we've been. We have had sellers not wanting to sell because usually sellers are buyers. So we still have this fairly high interest rate market. We're hovering around 7. We might be at 6.9 something, 7.1 something, but we're still in this 7-ish range. And we have more sellers entering than we have in years. Yet we don't have the buyers coming in to take that inventory. So we are down 25 to 30% in terms of buyer demand while inventory is rising. This is a pretty interesting dynamic in the market where we are getting to a place where inventory numbers are coming up. But what we're also seeing is that buyers are this 40%, 50% that are going off in the first week. These are the favorite homes. These are the homes in prime school districts. These are the homes that show nice. These are the homes with a nice backyard. These are the homes that have wood floors or nice floors or don't have funky paint on the cabinets. They're still the best of the best. This rates where they are. Buyers don't have money to come in and do extra things to the house. So when we have homes that don't look great, that need work, that someone's going to have to wait a year, 2, 3 to refinance and get extra money in their pocket to do the work on, it's less palatable to them as a home. So all things being equal, they're going for the nicely finished homes over the ones that need a little bit of work. That's part of this dynamic. So sellers, this is where this market shift matters to you, because if you can position your home to be ultra clean, can I just say clean, cleaner than you think is clean, like clean it for months before you put it on the market, have it professionally cleaned multiple times, have the windows cleaned, freaking have the outside cleaned, the roof tiles cleaned, I'm saying everything cleaned, and then have amazing photos and then have it cleaned again and have, just have it show really well, but also stage it, have all the funk removed, have things that are any hurdle to a buyer taken out of the house. And then when you go put it on the market, you're going to have buyers stumbling over themselves to get it in the first week. Price is also a factor, but people just want something that's so easy to move into. They want easy button options. That is what's moving off the market right now. And it so is tied into this rate issue. Sellers, if you want to sell before the end of this year, if waiting until next year when the market will heat back up and do its upward trajectory for a few months before coming back down, then sooner rather than later is going to be better for you, right? Because you're at the top of the downward trend rather than being at the bottom of the downward trend. So timing wise, if you have control over that, I would say sooner rather than later this year to sell is going to work for you. But if you have the opportunity to wait until spring, our spring market is always the best for you as the seller. Oh, I wanted to tell you this story. These 2 houses just came to market in a neighborhood not too far from me. The houses are very similar. They are of similar size. They both back to some green space, no neighbors behind. One is a 4-bedroom and 4-bath. One is a 5-bedroom and 4-bath. The finished square foot is only about 200 square feet apart. They each have 3-car garage. One is 3 garages across. One is a 3-garage tandem. The pictures are, I think, pretty different, but overall, if you walk the house, they might feel similar. One looks like a model home to me in photos. The other looks like they tidied up for a neighbor to come over before the photos were taken. The price differential on these two homes that came to market within 3-ish, 4-ish days of each other, $300,000. $300,000. You guys guess which one's gonna sell first. I mean, sellers, when you come to market, make sure you're pricing your home right. I promise you there's not $300,000 worth of difference between these two homes. One was not a custom build. One does not have a much more amazing lot than the other. One does not have mountain views and the other one does not. This is not something like we're missing some major question mark between the one that's $300,000 more than the other. Please make sure you have someone who's going to price it right. And the one that's $300,000 more is the one that looks like it only got tidied up. It does not look like the model home. So I beg and plead, interview your agent, check with your agent, ask them what they're going to do for your house, and do not be the one who drives the pricing so hard and so far that you linger on the market. Do not be a languishing property. Buyers, when you see a languishing property, when they've been on the market weeks and months, go in and make an offer. If you like the house, if you've walked the house, if it doesn't smell, if you're sitting there scratching your head going, why is this house still here? It literally could just be price. In this market, just make an offer, go for it, see what you're gonna get. Guys, thank you so much for being a part of this month's market update. If you wanna chat about how this market plays into your real estate plans, please reach out. You know I would always love to connect. And I will see y'all next week.